The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be on this 20th day of March, and we're looking at a Dow that's 115 points higher. The S&P is 1.83 higher. So this is a very important session. Let me show you something here in the both the E-mini, the June E-mini daily chart, the weekly chart, and right here I'm going to lift this up so we cover the monthly chart. And we were already, there we go. So within the context of what I always look for, in the Chapman wave methodology, we're always looking for the fourth highest peak to make other decisions. Is there a continuation pattern? Is this going to be the important reversal? So have a look on the left. You've got your peak D right here. I may as well type it in because it's been there since the 29th at 2883.25. So let me put that in, 2883.25 on 229. And that was a major high that particular week in the Dow and the S&P, many of the indices, and of course in the E-mini. It comes flying down 300 points, 350 actually, to the 2532 level on the 9th of February. And then it runs up again. What does it do? It goes to a peak D at 2807.25. The S&P and the SPY both did that. And the E-mini now shows that this has got a 2807 peak D, and the price is underneath the 9-period moving average. Now, I like to always talk about fighting chart formations. Maybe not fight, competing. Let's be as PC as we can. These are competing price movements, chart formations, patterns. And what you have here is either there's an arch formation, the lowercase h that I always talk about in the Chapman wave methodology. Usually it fails decisively when it's at an A or a B. Sometimes it goes to a C. So the fact that it's gone to a D says there's a little more internal strength than what one would expect under these conditions. The MACD just yesterday turned negative. The stochastic is way down 59%, not very good. On-balance volume is way down. It's actually at a level where there could be a pretty good spike to the upside, counter-trend rally. However, look, here's the other competing price pattern. It is this up channel, and we held, just nicked it by a fraction, yesterday's low, and today we've gone to the red line. So that says in the next 2 days, if there is a price move below yesterday's low of 2697.25, we type that in, 2697.25, we're probably going to be going quite a bit lower in the shorter term. If there is a push above the 9-period exponential moving average in the next day or two of 2742, that's going to be a positive. Say, yep, we can bounce a little bit more. That H pattern or the arch formation could in fact become a lowercase h going to a lowercase m, go sideways for a little bit longer. And that says you're raising the base of support. Really important information on these peak Ds. First one on the 29th, second one at 2807.25 on the 13th of March. Hey, wait a minute. We've got a peak D in the weekly chart at 2882.25 on the week of the 26th of January. So, oh, that should have been 1. Hey, that can't be right. If that was the 26th of January, then this should have been the 29th of January. I like to be accurate. Oh, 2-2. Oh, how silly that was. This is, yeah, the week of the 2nd of Feb made that peak D. And we've come down very sharply. Of course, we discussed that. Now we're making the arch formation. What did I just say? In the arch formation, it's invariably the A or a B, where the arch formation breaks down and you finally get a B minus or an A minus, an aborted rally. Hey, wait a minute. We've just got a peak D in the 120-minute chart as well. So here we are looking at the arch formation. This time, the up channel has taken out been taken out by the price movement down. So this is what I wanted to show, that there are so many patterns that form, but within the context of markets, I don't think you've ever heard anyone else talk about the fourth highest peak D, how important it can be. It could be a way station, a stopping station, a refueling station for a move, another 4 peaks to the upside, or it could be a very sharp reversal. Look at the Dow, INDU. Peak D on the 26th of January at 26,616. Chapman wave 2-bar reversal, another technique that I've developed over the years. And what does it do? It plunges 12% to the 2360 level on the 9th, has a big rally. It fails at a peak C and is coming down. It hasn't made a C minus yet. Need more evidence for that. But look how we've arched over, made a small little H pattern. Fortunately, we've been short from the just about the recent top in the 25,400 area. What we're really looking at now is what happens after these particular moves. So let me go through this, and let me just also add, I had been asked so many questions about it, I decided that I would have a webinar. It's called The Power of the Fourth Highest Peak in the Chapman Wave, the Peak D. It's going to be 6 p.m. to 7:30 p.m. Eastern Time on Tuesday, the 3rd of April. So it's going to be a webinar for my subscribers, but you can become a subscriber. There's a money-back guarantee, 30 days. And I'm really looking at, this is going to be very comprehensive in the sense that I'm also including how to use the fourth highest peak D as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman wave. And I'm going to be looking at what are the weekly and monthly implications for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman wave we have been following for weeks. So this is going to be a look to the perhaps all the way into the summer, but definitely there's going to be what can we do now? What should we be doing? What's the best line of action? Should we be taking money off the table? Should we be adding? What should we do? Really important phase. Let's just run these down. S&P SPX is right now up a little bit more. It's up. It was up 1. Now it's up 4.53 at 27.17. Peak D. I should have. I'll do it after the close today. I'm probably going to be putting a down arrow here. The second down arrow. Look at this. It made a peak F, unusual peak F at 28.72 on the 26th, but it was the same pattern, the MACD and stochastic. I'll be discussing all these patterns, how you can use the stochastic MACD to help you. It was a peak D in the weekly chart, and it's a peak D in the monthly. Boy, I have to tell you, this is a time to be saying, maybe we don't smash to the downside. Maybe we just retest the most recent lows made on the 9th of February. But there's a rotation going on, and that's what's so important. How do you treat markets that hold well because other areas are starting to hold in their rotations? I'll be back. We'll be looking at different indices, and right now the Dow's up 137. Basil Chapman, Tiger Technicians Hour.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So I still have a little problem with two of my 3 email accounts. It will be repaired at some point. Just I was a little too busy to be able to have someone help me with it today, maybe earlier today and yesterday. Hopefully I can do it this afternoon. It's really important I get these, but I have got some emails. So a question about the Dow, talking about the, let me just go to this chart here where I show my subscribers every single day, the different patterns. So this person is talking about the Dow right here, having a triangle formation, which is what I've drawn. You see this triangle right here? So it's a pennant flag type pattern. Most importantly, what is said normally about this particular symmetrical triangle is that if you break the upside, it should go to a level of consequence on the left, the peak on the left. Sometimes goes all the way up the flagpole. If it breaks down, it goes to the lower level of the pennant. I happen to have found over the years, I've found it to be a very unreliable pattern unless I put it together with my lowercase dreaded H pattern. This is the H formation, because then it gives me a whole bunch of other things to look at, and unless I put it together with the MACD and the slow stochastic. So I'm not putting it down. I'm just saying in my work, I found that it is not as reliable as I would like it to be. If I do it in the down right now, we've already pierced the downside. I don't think we, at this particular point, we need to go straight down, because if you look, there's a little mini H within this larger H pattern. Look, H in the Dow daily. But look, there's a little miniature H pattern right now. There's the back of the H. Here's the arch formation. And it's successfully tested twice now, but it did break that support level. So I look at it very differently. I'm saying at this particular point, now the proof is in the action, unless the Dow by Thursday is able to take out, I had already said the 9-period moving average for today, 25, wait a minute, was in the 120-minute chart, the 24,730s was the 9-period moving average. We're right there now. We're at 24,747, and 24,730s was the 9-period moving average. Now we're sitting on that support. Going to be very interesting. I still see an overbought situation that gives enough energy just for another bit of a bounce. But most importantly, because of the patterns that we're talking about. Let me just go back to the bigger pattern right here. The patterns that we're talking about, I'm just going to make it real simple. That in the Dow, since that was a question that I just got, unless we can break into the 25,500s by Friday afternoon at 4 o'clock, I have to consider lower lows and lower highs as the pattern I'm looking at for now. And I believe that we've got a very oversold condition, but we'll see whether or not oversold means huge rally or just a bounce. And then we go even more oversold. After all, didn't we go overbought and then very overbought? And then very, very, very overbought? Look at this monthly chart. Yeah, it can happen. So trends can stay a lot longer than you expect. Let's go to the QQQ. The Q's right now trading up 28 cents at 167.40. Horrible pattern, gap down yesterday, inside bar today. This is also an island reversal. The Power Shares QQQ Trust Series, this is the NDX 100, had a high of 175.21, all-time high yesterday. Not yesterday, on the 13th. It's reversed sharply. It was a peak D. How often are we going to be looking at these Ds? It can go to other letters. But D, look at the monthly chart in leg D with a very interesting candle forming so far. Long-legged doji. So this says if the Qs by Thursday afternoon, Friday, give it to Friday afternoon, are trading under 165, we're in it for more than just a short-term pullback. It's going to be more like an intermediate-term pullback. It's kind of my thinking right now. It's kind of our trading position for my subscribers to my opening call. So let's go on. And so resistance is at 169.50. Key support is at 165. It's right in the middle at 167.37. Let's go to the IWM. IWM is the one that's kind of fooling a lot of people because it was very weak, then it was holding very well, and now it's just kind of ho-hum. Up 2 cents at 156.30, made a peak E. I'm pretty sure I'm going to be putting a down arrow by tomorrow in this daily chart, which is suggest not just a short-term sell signal, but probably a sell mode is unfolding. Let's just give it the 2 days to play out. Weekly chart is still holding pretty darn well. So is the monthly. So the Russell 2000 is within a nice trading band. The close below 154 by Friday is very negative. The close above 158.20 would be pretty positive, I must say. Now I want to go to the gold. So gold at this point was down sharply. It's now down only 5 at 13.12. Under the 9-period moving average. The MACD is not good. Stochastic's not good. I'm suspecting that if the financials, I'm going to go there right now, the financials trading up 17 cents at 28.83 based on the XLF are going to be the clue for me. I think, I'm trying to put this whole thing together like a little package. If the financials start to pull back much sharper and the KRE, which is better than the XLF at this particular point, it is up 8 cents at 63.57. Still made that peak D in the daily and a peak E in the weekly if there's no new high this week, and a leg F/C in the monthly. This is the one that's holding better, but not great. It's still under the 9-period moving average. It's got the pattern that says to me at 63.57, it looks like it wants to test the 62s over the coming week. And the XLF seems to me to want to do some testing of at 28.82, of 28.20 to 27.70. That's the area that I'd be focusing on. And if that happens, I would not be surprised if maybe at that point people are saying, hey, I don't like what's going on. I think I need to have some kind of a hedge. And the GDX, which is the miners, which is trading now down 25 cents, 21.26, and the GLD. So look at the GDX, the gold miners ETF. Now look at the GLD. The GLD, in a way, looks like it's the same as the GDX. But wait a minute, that monthly chart is still very strong in the GLD. It's the gold. This is the Spider Gold Trust holding above the 123.33 level. The 9-period moving average at 124.22, less than a point away from breaking down. But so far, this is really just a consolidation. And if you look at the dollar DXY, the dollar at this point tried to rally. It's not a bad candle. It's up 35 cents at 90.24. I still say Nothing to see here, folks, until the dollar starts, if it can, trade in the 91.20s. Then I'm going to say, this is very interesting, because now the dollar is showing strength. The EUR, USD, like gold, just kind of stuck. A lousy candle, but still holding okay within the patterns. And the USD, JPY, which is the yen, dollar-yen currency pair, also in a trading band, just trying to bounce here. But wait a minute, high-grade copper, I'm putting it together with wood. This is the iShares Global Timber and Forestry ETF. That's been up near the all-time highs. The high-grade copper, I'm talking about these because these are international economic, call them icons. So copper is down below the 9-period moving average. That's not a good sign. We'll go to crude oil as we go out here. Crude oil is, in fact, down. Oh, it's up $1.72. Hey, nice, good move. Crude oil. I'll be back to talk about that. Now it's up 160.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So let's just go to the crude oil, which is having a... is that because the president is talking to... instance of Saudi Arabia? Yeah, maybe it is. So up $1.57 at 63.70, about to make that leg D, that missing leg D above 64.30. But if it does that, it's also broken this downtrend line from the previous peak F made in January, late January. So this is going to be good action if there's a close about a point higher in the next 2 days. But it doesn't have to be a close, just a push higher. And that would make leg B in the weekly chart. Then I have to start thinking about it a little differently, making that monthly chart quite important. So crude oil, I'd said 63 should be resistance. In fact, it's almost in the 64s. And I said 60 to 59 would be key support to hold. Whoa, it's far away from that right now. So this is going to be an important week for crude oil. Now the TLT. All right, so we're going to look at the TLT. The TLT right now is down 43 cents at 119. What does that do? It says that the TNX, I was asked about this, so let me go to that. The TNX having a very nice move here, testing this resistance level. Now I can raise it. I usually like, let's have a little lesson here for me in the Chapman wave. I like when I'm doing trends, trend lines, and I've done trend lines, wow, since I used to take my son skiing, and I would ski maybe 2-3 times and then say, I love skiing, but I hate the cold. So I'd go into the lodge and eat and go through my chart books that I used to get and draw short lines, take my pencil and a ruler, play a little plastic ruler, and draw these lines, trend lines. So I like the trend line to have the outer wick as the tops. But when I see bodies that are very important, I'll use the bodies first. So in this particular instance, I used the top of the candle of the TNX. That was on the 21st at 29.43. Then I used the candle high of the 9th at 29.14. But the very next candle had a high body at 29.01. So I tend to take that now as the key because I've got 2 out of 3 price points that are really exact. And now it goes to where? Today's exact price that we're at right now, even though it's gone higher. So then I would normally do this. I'd either draw a parallel line like this. It's easy for me to do here on Trade Station. Clink. And I do that. And that says, this is the next line. This is the Chapman wave inside track repellent zone. But actually, that's one way to do it. I don't like to make it too messy. But for my eye, to start with, I join that top, and I make this trend line a trend line that takes the outer points, the point that was made on the 21st, and then the high that was made on the 9th. And now I've got not the one that is touching at today's high, but a little higher because it's saying to me 29.90, if 28.90. If the TNX goes above that, there's just a really good chance it's going to take out that high. It just gives you that little extra meaningful accommodation to price points. And here we are with the same trend line in the weekly chart. Look, I can go like that, and you've got yourself a very nice multi-hit trend line resistance. And that's just saying very clearly, if the crude oil doesn't have to close. I'd prefer if it closed if you want to look at the upside. But it doesn't have to close, but it just needs to get to the 29s. Anywhere in the 29s, it's broken that resistance. And now you've got, it's a little, I'd prefer 2 bars before it took out that. But you've got yourself a Chapman wave inside wedge. A Chapman wave falling X. If it takes out the highs, it could double this price. So these are a whole bunch of techniques. So what's it say? If the TNX in the next 2 days, let's go to Friday, since I was also looking at the weekly chart, can break into the 29s, preferably break and close there. I'm only saying preferably if you're positive on yields, then that's going to be very positive for the yields. And if there's a pullback and it goes under 28.56, the 9-period moving average by Friday, that just says, you know what? The TLT will finally go to the 120s, 121 area. And it's at 119.03 right now. 121 area, I should say. Okay, I think we've covered that pretty thoroughly. Now, a question about VNOM, and then I'll get to questions that I do have on one of my emails. Yeah, this is acting well. Well, the question is, what do you do at a peak F top in the weekly? Monthly chart is still very strong, and a peak C. This is Viper, something or other. Viper, Energy Partners. That's interesting. So it's an energy stock. It's probably kind of a REIT or something, or whatever. It's a dividend-paying thing. Anyway, it's acting well at 22.92. I guess the question is, would you buy it, or would you wait for a pullback? Based on the weekly chart, I would just say it's a nice candle. There's news. The MACD's turning up. Histogram's turning up. Stochastic's turning up. I need to see a price point above the 3 days ago, above the high of 23.37. It's at 22.92. But I tell you what you could do if you're not long. I would start a position at this particular point. The risk is that I would give it no more than 60 cents. I'd probably say I'd give it no more than 45. Let's say a 2% risk. So it's 44 cents, 45, let's say 45 cents. So 22.50 is my stop. Get in now. And if tomorrow is another good day and it goes to 23.14, I think it's going to test and break the high that was made on the left side of 360. You've got 2 days to do it. Why? Because it tends to take a bounce and then stall. It's taken a bounce and a stalled. So this is the next day with the next bounce. So if there can be a positive 2 days instead of bounce, fail, but a good 2 days, you're looking at strength rather than weakness. And okay, so now I've got a couple of things. Let me go through my list here. BA, yep, Boeing. Boeing's trading right now up 6. Oh, that's why the Dow's up 142. So it's up 6, and I said, watch out for Boeing. There could be a nice bounce. That's going to help the market. The Dow, it's at 338.43. It's hitting the 9-period moving average. I'm only treating this as a bounce. I know that there are people saying, hey, that was it, and now we can start doing buying. I think it's absolutely correct. There are issues that you could be buying. The Boeing did almost a 1-to-1 in my Chapman Wave 1-to-1 extension, parallel extension. I just don't like the MACD and stochastic. I also think it's overbought. I also think that the monthly chart is at a peak E, and it will take time before it breaks the high of 371.60 made on the 28th of February. So this to me is just a bounce. Now, what would I do? Normally, I just grab the top and I go right here and I say, all right, there's my trend line resistance. If Boeing's able to close above 345, I'll be very impressed and say, hey, a bigger bounce than I thought. So maybe most of the damage is done, and then there'll be some residual pullback for maybe a lower low, but a chunk of the work is done. At this point, I don't think so. All right, next question. UTX, United. I mentioned this morning in my newsletter, I said, let's see how Boeing, UTX, and M do. UTX tried to rally. It's now pulling back from a bigger move up. It's only up 49 cents at 127.69. It made, let me show you something here. It made a peak F at 139.24 on the 29th of January. It's pulled back really sharply. It pulled back to the 122s, bounced to the 138 area. Now it's trading at 127. Higher highs and higher lows. That's my contention here for UTX and M as we're going out. M is, in fact, not very good. Also, same sort of thing. H pattern. So many H patterns. I'm not going to fight that. The down moves are coming.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, so I got a question about is energy one of the areas where the rotation is happening? Some interesting setups. You know, I think the move that we've just seen today in crude oil, I need to see a little more evidence that it's going to go much higher. America is really the big producer of oil. I mean, we're the ones now. Isn't that incredible? That we are I remember back in the 1970s, the oil crises, the different oil crises. So this is just remarkable how it's happened. So I'm just going to hold off on my thinking about that. Look, if you go to the XLE, which is the energy sector, this is this flat base here. I have seen on occasion that this can produce a really strong move to the upside, but it happens really suddenly, and it happens through an exogenous, some kind of event that precipitates a move into the energy sector because of an oil crisis. So as I see it right now, the pattern is the lowercase h that goes to a lowercase m. When it completes, there are times, we've seen it many times before, where there's a huge move, and if the move we saw that in the euro, let me just show you the pattern, EUR USD. Look at the monthly pattern. It doesn't matter if it's monthly pattern is, as far as I'm concerned, it's a fractal, and that particular pattern can be in 1-minute charts or multi-decade charts, doesn't matter. So you see the lowercase h that I drew for the euro-dollar currency pair back in the monthly chart back in 2015. I said there's a chance, I'm thinking that there'll be an h and there may be a lowercase m. That's exactly what we've got. H with a lowercase m. The right side was lower than the right side high was lower than the left side, but it was all inside until that final culminating move back in December, January of 2016, beginning of 17. Then we saw this huge move, and if it breaks and closes above the arch high, closes decisively, you can go much higher, which is exactly what we've seen. Then we go back to the XLE. So far, this is not the monthly chart. This is just a daily chart. And the daily chart says the XLE has been making this. It's made an arch, one arch in the weekly, but it's made a double arch in the daily. And that says, just real simple, you can even hold off doing anything, because if it breaks and closes above 70, it's at 67 right now, let's say. If it closes above 70, you can jump in. So you've lost 3 points. But I would prefer to hold off, because we're going to get a sign, I think, a lot quicker. By Thursday or Friday, we might get a sign saying crude oil is about to go much higher. It's going to help the energy sector. So let's just do that. I haven't got anything right now than to say sideways, ho-hum. Now, I think that there's a chance that with the storms, the 4th storm coming up on the northeast here, I'm tired of it, to tell you the truth. that we might be getting some kind of a rotational recession. I've talked about that over the last 3 years. And we have, if you looked at the charts, you will have seen that some sectors essentially have had a recession. Home builders have had a recession for a little while here. So I'm thinking that Cintas, overall's uniform rentals, we have no position right now, made a double top, all-time high peak C1, C2. A little unusual. Usually it's a D, but this is a very legitimate peak C1 at 178.34. And then 2 days later, 178.28, 6 cents lower. And now it's pulled back quite a bit, but not a big deal, but quite a bit in terms of the daily chart. And the monthly chart has got a Chapman wave 2-bar reversal. So if I'm correct in saying that we're going to get a rotational recession, I'm looking at the tech sector essentially having a very big digestive move in time. I don't know yet about price. And within the context of the different really well-known. Oh, I've got Scott in Safety Harbor. Scott, I didn't see you. Hi, Scott. How are you?
Well, you know, VMC is really, I'm never wrong, so I don't like to be wrong. VMC has cashed me out now 7 times.
No
I do 1,000
way.
shares, so that's $7,000, which is not a big deal, you know, in the big scheme of things. But it just, the bigger thing is I don't understand VMC and X. I mean, these infrastructure plays will get done. All I can tell you, Basil, is my theory is there's just so much other things going on that it's just, as you say, it's just not in play right now.
So this is what I wanted to say to you, Scott. I was thinking of you the other day because I looked at CX, which is your former one of your trading vehicles. You see, this one is the same pattern.
I made a massive profit on that, you know, and it's still strong, but not.
So let me just finish my thoughts. I just wanted to say CX has not broken its low, but there are a couple of stocks that are coming off bottoms that have an opportunity to be your kind of trading stocks. So CX hasn't broken the low about in the 640s. It's a 672 right now, but your VMC did break. And that's saying to you, be careful, because the patterns seem to be a little bit similar here, and that means that CX could be a little bit vulnerable to come down and retest the left side low. But what I did want to say
CX,
to you is,
right, not X. The CX, the problem with CX is, and I don't know if you remember, but the owners of CX said that they weren't going to be part of the wall and they were kind of anti-Trump. And that's kind of what took them out of the play. But, you know, that beside, the thing with X is still, you know, I mean, that's perplexing as well. I mean, there's all kinds of construction going on. I mean, I'm in Florida, you're up there. So, I mean, everywhere you look, and it just doesn't make sense.
Scott, what I wanted to say to you is, I would just, at this particular point, I'd take a little time out and I'd go to stocks that are in the infrastructure sector, like a Crown Castle. Well, maybe it's in the broadcast infrastructure. If you go to something like a GGG, Triple G, and that is Graco Inc. infrastructure. This is one that I would like you just to keep. I'm not saying to trade it. I'm saying keep it on your list because it's one of those in the infrastructure area. I've got my eye on it. That's acted very well. So I'm saying to you, why don't you think of slightly different modus operandi? Go for the ones that have acted well under these conditions. See what you can do with it. Maybe you could even just take 100 shares, start working with it for a week or so, something like a GGG. I'm just saying that to me would be more in line with what I think would be your kind of a play.
So you're looking at GGG rather than X or VMC,
yes, because
or
it's held CX. Well. It's already had every opportunity to fall, and it's making higher highs and higher lows. It doesn't mean to say it couldn't have a bit of a pullback here from leg E, but just keep it in mind. This is more the stock that I'd be looking at.
Okay, I appreciate it. Do you agree with me, though, as far as all these other things happening, that people are not looking at the infrastructure plays right now? They're looking at Facebooks and everything else?
No, they're not. And not only that, the Facebooks, I'm going to go through in a moment, are also I'm going to be under pressure. The Googles, Facebooks, I'll show it as soon as we're finished. You and I'm going to take the next segment and do that. So, Scott, keep in mind, GGG is one of those to keep your eye on. I'll be right back, folks. Dow's up 116, S&P's only up 3.48. I think Boeing is part of that. We'll go to Facebook as soon as we are back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yeah, Steve Rhodes coming up. Of course, you've got Dave White, you've got Tom O'Brien, you've got Andy Heck, I believe. So Tuesday, and don't forget, go to the front page of TFNN, my webinar called The Power of the Fourth Highest Peak in the Chapman Wave, Peak D, 6 p.m. to 7:30 p.m. Tuesday, the 3rd of April. Oh, man, I can't wait. It's going to be very exciting. And I'm going to be looking ahead. What do we see in the weekly charts with peak Ds and monthly Ds and Es? How important is it? I wanted to mention Facebook, down again. Remember, for actually a couple of months, I've been saying Facebook has gone, it's a 10-bagger, gone from the 18s basically to the over the 180s. It went to 195. If you don't think a 10-bagger doesn't have to have a rest, this is the rest. It doesn't matter the news. It needed a rest, made a peak D in the weekly chart. It's in a leg D in the monthly. I think this is a peak D monthly. Facebook is taking a very well-earned breather. Peak D, hat-trick top in the daily at 195.32. The power of D. This is going to be the theme for my webinar coming up in 2 weeks' time, Tuesdays' time, I believe it is. Yeah. So Let me have a look at this right here. So that's Facebook. Facebook, I think, is going down. I'd say 163s was my target a little while back. Now I think it's more going to be like the 153 to 157 area is the next level of support. Look at Google. Google right now is up. It's down 4. Now it's down. Made a peak D in the daily. It made a peak F on the 29th. Now it's made a peak D in the arch formation and double top, and a peak E in the weekly, and a peak E in the monthly. I think Google needs a rest. Let's look at Oracle. I was going to do Oracle yesterday. I did it for subscribers. I said Oracle probably, what am I doing here? Oracle has probably made some kind of a top, made a peak D top, and look at this. Goes from the high of a peak D in the Chapman wave on the 13th at 53.48, trading a little bit lower here at 47.10, down 4.85. I hear the music. I think we're about to wrap up. Folks, check out the front page of TFNN, 30-day guarantee. You sign up. Otherwise, it's for my subscribers, but you can be a subscriber by signing up, and you can have it, well, basically for free for a month. So I'll be back later on with Tom O'Brien. Have a great day. Otherwise, I'll see you tomorrow. Stay tuned for Steve.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.